Okay, so before I even talk about actually getting stuck into the markets, I just need to talk about the basics because some people might not get an idea of what this is, but I'm just gonna give the most important points and not give a whole rant or a whole rumble about what is the idea or what is actually trading. I'd probably just give the most basic way and my own explanation of what it is. That's why I put Donsluvsfx in brackets. Because what happens is when you get into this industry is that you will be bombarded with a lot of ebooks, a lot of courses, a lot of um, noise concerning trading itself. But I think I should actually just narrow it down to actually what you're doing and narrow it down to the most important things, because you can learn a lot from this. And there's obviously some stuff that I'm not going to mention here, but like I said, I want to actually tell you about the most important things that you really need to know. And anything else that you'd love to know, you're free to go on Google or go in any search engine and go and find that out for yourself. But I think the most important things that I would love to tell you are actually about getting in the markets, putting trades in a market. So that is actually what I wanted to tell you. So basically, what you're doing when you're trading is that you are buying or selling a position or a price point within a given market. It could be any market. It could be the forex market, which is the most popular one because everyone knows it. Um, it could be futures. It could be indices, crypto, commodities, bonds, stocks. It could be any of those markets. Forex is probably one of the most liquid markets. That's why everyone's talking about it. It's liquid because there's a lot of buying and selling that's happening in that market. Same with indices, same with crypto, futures, bonds, commodities such as gold, silver, and oil. Stocks as well. Stocks is quite popular, and government bonds as well. But the whole idea, in fact, it's not really important to know that. The most important thing I would say to you is that you should probably learn price action of a market, whether if it's forex, crypto, indices, futures, commodities, bonds, stocks. You should learn price action because a market or price action is exactly the same as on a forex pair compared to a cryptocurrency, to gold, to government bonds. They move in a similar fashion. They go down within a similar fashion, they go up within a similar fashion. So the most important thing that you should probably learn is price action. So as you can see in front of you, I was on the Kiwi Swiss franc today because the Swiss franc pairs are quite bearish this week. So I thought I would just take a look at them, but I've not actually traded this week because I've had other things to do. But as you can see, I'm looking at the Kiwi Swiss franc, or the New Zealand dollar, the Swiss franc, and you can see that this is price action. So what you're seeing in front of you, these are called candlesticks. This is just one way of representing information within a certain time period, and that certain time period is obviously in a 1 minute time frame. So this means that each candlestick that you see here, you see these green individual or these red individual candlesticks. This represents 1 minute. So as you can see, this is going to close after 1 minute and a new candlestick will open, and then it will close after 1 minute. So there, it just opened now. And then once that 1 minute is done, it will close. And that's the same thing that happens on a 5 minute chart, a 15-minute chart, a 1 hour chart, and a weekly chart. It's the same thing. Any single time frame that you're looking at, it just depends, or it is a representation of the candlestick that you're looking at. Let's just go back to the 1 minute. So since I've explained that, that's basically what I would say to you guys is you are actually buying or selling a position in a given market, and that market could be forex, crypto, indices, futures, commodities such as gold, silver, oil, could be bonds, stocks, could be anything. I mean, it could be there could be a market that shows the price of a shoelace or there could be a market that shows the price of grass. The whole idea that I want to get to you guys is not the market itself or what you're trading or what instrument you're trading. A lot of people will tell you you're buying and selling currencies. No, you're not buying and selling currencies. You're just buying or selling a position or a price point within that market. And that market just so happens to be what I've just listed so many times. You know, all those markets that I've listed there. So basically, markets, right, since you're selling and buying at the same time, they are going to move in a fractal nature. So it's not necessarily going to go up forever. It's going to go up, down, down, up, down. But overall, the trend or it is going up, but it's going to move in a wave like nature, or like I said before, a fractal nature. So you could actually see that the market went up and then it retraced back again. It pushed up again, kind of fiddled around here a bit before going down. But that's how the market moves, because there's buying and selling in every single time frame. There's people on the weekly time frame that are buying. There's people on the 30-second time frame that are selling. There's people on the 1 hour that are buying. Every single day, there's each and every single person getting involved in any market, buying or selling at the exact same position, the exact same time. That's why it moves in this nature where it will never go down forever, it will never go up forever. It moves in waves or in a fractal nature. So that's actually what I wanted to say to you. So each instrument or each thing that you're trading, anything, forex, cryptos and stocks, gold, um, futures, commodities, all that, they are listed in pairs. As you can see, this is listed as a pair. So the pair or the instrument or the thing that is before this dash or this slash right here, sorry, is the base currency, and the base currency in this market is the New Zealand dollar. Let me just turn that off. This is the New Zealand dollar, that's the base currency, and the quote currency is the Swiss franc. So the base currency is always the first one. So basically the market is saying 1 New Zealand dollar is worth this amount of Swiss franc. The same thing for other pairs. Let me go to the Euro USD. The Euro is the base currency. The US dollar is the quote. So 1 euro is worth this amount of US dollars. Let's go to Bitcoin. So Bitcoin is the base currency, and then the US dollar is the quote. So then 1 Bitcoin is worth $29,583. So you get the point now. That's how each and every single instrument is listed. And when you are buying a market, you are buying the base currency and you're selling the quote currency simultaneously. And when you're selling the market, or when you are putting a sell position within a specific market, you are buying the Swiss franc or you're buying the quote currency and you're selling the base currency. That's why you can buy and sell. And that's why trading is often different to investing. You know, with traders, we don't really care whether if the market crashes or if it goes up. We can make money either way. So that's also one thing I wanted to say. And the other thing that I would probably say is talking about entering positions. So let's just say, for example, I would love to go bullish on this market right now. Forget about the targets for a second, right? So as you can see, when I enter a position, it's different if you're using TradingView, but if you're using other platforms like Meta, Trader, the display will look different, but overall the concept is the same. So I've entered at this position point. If the price goes into this buy order, it will activate this buy order, or you can actually manually put it yourself. That's why I say it depends what platform you're using. It won't look like this on MetaTrader, but it definitely looks like this on TradingView. So if the price had to enter this long position, then that means that I've entered at the price that I've listed in purple, or is it in gray? I've entered at that price that I've listed in gray. And I would hope that the price would obviously go up because this is a long position, as you can see from the green. And my stop loss, which stop loss is a mechanism that if the price actually goes against the direction that I had speculated the market to go in, it would take me out of this position at a specific loss. And that specific loss, you can set it according to how much you are willing to risk. It depends on how much you are. I can extend it all the way down here. I can extend it just over there. I can extend it any way I want to. I can even make this target bigger based on if you've done certain analysis and stuff. So yeah, if the price would go into my position will be active. And if the price swings and hits my stop loss, it will take me out of the market at a certain loss. If the price goes in my direction and hits my take profit, it will take me out of this position I entered here in a profit. So hopefully that makes sense. That's basically some of the things that I'd have to tell you, which is probably the most important things you need to know. Yeah, that's really the most important things, guys. It's just buying or selling a position in a given market. You can do this in any market. It's the same. Um, each market, each instrument is listed in pairs, and since they're listed in pairs, you can buy and sell them. There's a lot of buying and selling within each instrument. You'll find that in the forex market specifically, there are certain currencies that you can trade, and there's certain ones that are not listed on brokers because not every single currency pair or every single thing is going to be liquid because it has to do with sort of the economies of these countries. Obviously, you're going to find that when you are looking in the forex market, you'll see the euro, the US dollar, the British pound or the pound sterling. You're going to see the Aussie or the Australian dollar. You're going to see the Kiwi, which is the New Zealand dollar. You're probably going to see the Swiss franc. Those are probably the most abundant or maybe the most seen forex pairs you will see because obviously Switzerland, New Zealand, Australia, the EU, the UK and America, they have the biggest economies in the world. So there's a lot of buying and selling that's happening in between those two economies. So that's why they're the most liquid. And you could probably find a forex pair that you could trade, let's just say, I don't know, the Brazilian real and the South African rand. You could probably find that, but you won't really find that in most brokers because, I mean, look at this. Like, there's nothing even here. Like, let's go in a bigger time frame. You can absolutely see that there's zero liquidity. It's just moving sideways. It's nothing happening. This is a bigger time frame, so you see what I mean when you actually start trading the forex pairs. But this is not even only on forex pairs. Again, this is on gold. You can absolutely see it's liquid because now not only that it's moving, it's not moving sideways. It's actually trending. The same thing with the Euro USD, which is probably one of the most liquid forex pairs out of any forex pair because I mean it's the euro and the US dollar, biggest economies in the world. And then Bitcoin is always volatile. Cryptocurrency is always volatile. And then if you go to an index like the US 100, which an index is obviously a measure of stock prices or companies, within a given exchange, which the exchange is the NASDAQ. And there are 100 companies listed on the NASDAQ. And this is actually an indication of how those 100 companies are performing that are listed on that exchange. So that's an index. And this index is based in the US. So it's most likely going to be listing 100 US companies. And I'm pretty sure, as far as I'm aware, the NASDAQ actually has tech companies. So I think the NASDAQ is focused on tech. That's the same throughout any index. But you get the idea about what is happening right now. Let's just go back to that pair that I was looking at the beginning. But you get the idea about what I want you guys to know. You know, those are actually probably one of the most important things that you should know. It's just price action, and anything else that you'd like to see, you'd have to actually do it yourself. That is actually how you're actually going to learn how to navigate markets in general, is that you actually get into the market, open a demo account, see how price moves, see what is a spread, see what happens when you go into certain amount of losses, what happens when you go into certain amount of profits. Get to learn price action within markets, and you will definitely see that it's quite similar throughout any market that you look at, and it really doesn't really matter if it's a forex pair, if it's a gold market, bonds, stocks, indices, crypto. It's all the same. So yeah, that's all I wanted to say.